Okay, so formal welcome again. Our focus would be on free zone tax regime. I'll take you through to the key areas. We have recently been issued the guide on this also, IFTA, and I have taken the key areas for that. And I'll be diving deep into the trading activity, which I believe quite a few are already having. So basically, just to start with, I'll just give you a brief, overview about the taxation itself. It all started when, about 2 years ago, they announced, the corporate tax itself, and it is first applicable on all the financial years, which are starting on or after 1st of June 23. So it means that if you're a company whose financial year have started, prior to that, and if you are December, your first tax year would be starting in 24. But if you're a company whose financial year, example, have started in July, in last year, then you have already been subject to the CT. The first deadline, depending on in which month your license is being issued, is on 31st May, which is just a week after. And for any future companies which somebody will be, incorporating within 3 months of company formation, we have to file the CT registration. If it will not be filed, the fine is, of course, 10,000 AED. So I will urge all of you that you have to get the registration done, and there is no threshold required for that. Even if you have zero sales, you are a dormant company, but still you have to get the tax registered for CT registration. Just a summary here at for all the companies whose formation it is up till Feb, between Jan and Feb, they have to get registered by 31st of May, and then so on and so forth. So example, if a company was incorporated in the month of July, then they have to get registered by September 30th, in this year, and so on and so forth. So please ensure that you get the registration done on time to just, avoid the fines. Let's now focus on the corporate tax on free zones. So the corporate tax on free zone, we need to understand first that it is applicable on whom. The free zone tax regime is applicable to somebody or an entity who is a free zone person. It is very important to understand that if you are a juridical entity, which means you are a legally incorporated entity, for example, you are LLC, in that case you will be considered as a free zone person, and corporate tax special tax rate of 0%, it may be applicable on you. But if you are a national person, for example sole establishment, then in that case the free zone person tax regime cannot be applicable on you, because it is only applicable on the entities which are incorporated. Next, we need to understand the types of the free zone person. So in this case, we have two types here. First one is qualifying free zone person, and second one would be non-qualifying free zone person. So throughout this session, we would be speaking about all those who are qualifying free zone person. So it will be QFZP. So all the free zone tax regime is applicable only on these entities. Once we are able to find out that what are the conditions of being qualifying entity, then we need to understand that if we generate the qualifying income, then we will pay 0% tax on that. And if the income will not be the qualifying income, it would be straight away taxed. It is very important to understand that the same company may be generating some income which is the qualifying income, and some income which will not be the qualifying income. And depending on certain conditions, which I'll explain you in due course, we'll see that some of your income, it would be taxable, some may not be taxable. And even if you have a branch in the free zone, which is very important, which is just, it was clarified in this, the guide which was issued by FTA, that if you have a branch inside the zone, that branch standalone can also achieve the status of the qualifying free zone person itself. So, I may be having the head office inside the mainland and the branch in the free zone, then that branch, standalone can also get the status of qualifying free zone entity. So once we are able to find out these two things, that who can be a qualifying free zone person and what is a qualifying income, then we are all set, and we can see that whether we will pay taxes or will not pay taxes, on our income. So to be a qualifying free zone person, FT has specified several conditions. And the crux is that you have to meet all of these conditions. First condition is that you should have, adequate substance in the zone. So, which means that if you are operating from the zone, the core income generating activities must be conducted from the free zone. For example, if I'm a factory, then I should be having a proper plant machinery inside the zone. I should be having sufficient, adequate assets to to conduct the operations. I should be hiring the qualified employees sufficient to match my operations and a sufficient level of operating expenses. So I should be a proper business inside the zone. For example, the example could be that I'm maybe having a company outside the country, and for the invoicing purpose only, I open the company inside a free zone. Then in such cases, I would not be able to meet my active, adequate substance condition, and I'll not be getting 0%, the benefit. Second is, you should be generating the qualifying income, and we'll deep dive into it, that what can be a qualifying income. Okay, so please just bear with me. I'll explain you in due course. But one of the key condition is that I must be deriving the qualifying income. Next is that I should not have, opted for standard tax here. There are certain conditions, certain areas where the companies can say that, I want to be taxed. I do not wish to have 0% tax here. An example could be if I wish to form a tax group. So the tax group cannot be formed with a qualifying free zone entity. So it means that if you wish to be a part of tax group, then in that case you would be opting for the tax at the standard rate itself. Next condition is that I should be following the transfer pricing as well as arm's length rules. So it is, in simple form, all my transaction with my sister companies, be it the head office or the subsidiary, it should be at fair market value. Although, this transfer pricing, in itself is very huge area, but just to give you an idea that your transactions with your shareholders, with your staff, with sister entities, all should be at the fair market value. And then here are two other specified conditions, which are that if you are also earning a non-qualifying revenue, then it should be within a specific threshold. We call this as de minimis rule. So I'll explain you at the end that how we calculate this. Example could be that if I'm earning, let's say 100 in terms of my total income, and non-qualifying income should be within 5% threshold. I'll explain you how it works, but I've just given you the example. And I should be preparing the audited statement. It is a requirement, because as we know that if we go outside the free zone, the requirement of having the audit statement is only applicable if my turnover is greater than 50 million. But if you are a free zone entity, this requirement is not applicable. If you wish to be, a qualifying free zone entity, then your audited statement is a must. It's not based on a threshold. So once I fulfill, all of these conditions, only then I would be able to, to be called as qualifying free zone person. So just to take you back, that my first condition, my first find is that whether I meet these conditions. If I meet these conditions, second find, of course, is that whether I'm generating the qualifying income. And if I'll be generating the qualifying income, I am then, get the benefit of 0%. So my first thing is done. Now we'll see the search of second condition, or second, the condition to earn the 0% X regime here. So in this case, I have now to see my activities. Okay. And these activities would not only be based on the activities which I have in my trade license. These are actual activities which I am, conducting from the business. So I divide them into three categories. First one is the qualifying activities. Second one is the excluded activities. And third one is some other activities which will not fall here. So I have a list of 14 activities which FT has issued, which are, called as the qualifying activities. Then I have a list of 7 activities which are excluded activities. And then anything which will not fall here or here, it would be in the other activities. So at present, I am just, putting my activities inside the bucket. So the list of the qualifying activities, which was also updated a few months ago, there are around 14 activities. Most common one would be manufacturing, processing, trading of the qualifying commodity. Then we also have head office services. We can also have the companies which are just the holding companies. Then we also have very important activity which most of us are familiar with, which is the distribution of the goods. So the distribution of the goods, if it is conducted from a designated zone, very important to understand. This is the same concept of designated zone, which is applicable on VAT. So the common examples could be JAFZA, Hamriya Free Zone, SAF Zone. All these are, designated zone, which are, which are having strict, control over entry and, exit. But the zones like DMCC, zones like, Silicon Oasis, all these are not considered as the designated zone. So simple words, if you are a distribution business and you are operating from, for example, Silicon Oasis, you cannot avail this kind of benefit of 0% X unless until you are operating from a qualified, a designated zone. But for all other activities, it is only free zones. So we don't have anything specific about designated zone. It is only if I am having the distribution activity. Then I have certain other activities which are excluded activities. Okay. This could be any transaction with, natural person itself, banking activity, insurance, finance, and then some activities specific to the property related, which could be the commercial property located inside a zone, and then any other activity which is ancillary to above. And here also I have this very important condition: any other activity which is ancillary to above, which means it's not my actual activity, but it is required to to complete my my actual activity. So this is important, that any such activity also would be considered as the qualifying activity. Okay, just for the sake of understanding, for all of you who are sending the question in the chat, please, if you can send me in the Q&A option, so I can have all my questions at single place, and then I'll be able to answer that. I've got I've already got quite a few. At the end, I'll be answering all these questions. So once I have segregated the activities, which are the qualifying activities and excluded activities, what I'll do here is that now I'll see that who are my customers. Okay, this is important. Whom I'm selling, whom I'm dealing with. So if I am conducting transaction with other free zone persons, okay, then income from all transactions except for excluded activities would be considered as my qualifying income. So very important to understand. For example, I'm a tax consulting business. Now, tax consulting business is not in this list, is not a qualifying activity, and it's not an excluded activity also. And all my clients are within the zone. So in that case, although I do not fall in this activity list here, the qualifying activity, still all my transactions, because all my clients are in the zone, would be considered as the qualifying activity. And then if I'm dealing with non-free zone persons, whether within the country or outside the country, in this case, income only from the qualifying activity would be considered as eligible income for the qualifying income. So in my case, if I'm a tax consultant, I have opened my company in Jafza, but I am serving my clients outside the zone also. So in that case, I would not be able to get the benefit of it because my activity is not within the list of the qualifying activity. And then I have to see that income from all other transactions. So any other income, if I am conducting from the free zone, if it satisfies the de minimis requirement, okay, which I explained you that if 100 is my income, it could be 5% kind of a threshold. I'll explain you at the end that how exactly we'll be doing this calculation. One thing which is very important here is that distribution of goods must not be to the end user. So it must be to somebody who is selling the goods onward or who will be utilizing the goods to, to make some other goods. So example is that I am a furniture seller. I'm a distributor. I am having my company in Japsa, and I am selling the furniture to a company who will be selling that furniture onwards. So it's all good. I'm fulfilling the condition of being a qualifying free zone person. But at the same time, if I am selling the same furniture to a company within the zone, and that company will be using this furniture for their own office internally, that would be considered as the end user. And in that case, I would not be able to call it as a qualifying income. This is very important and very crucial point to note is that I should not be supplying to the end user. I should only be supplying to somebody who will be having it for business and it would be sold, onwards. So once I am having all these things, what exactly I need to do? I would see here that if I meet all these conditions, then in that case, my qualifying income would be taxed at 0% itself. And my other income, which is, if any, would be taxed at the standard rate. Now, one key area here is that if I'm having some other income which be taxed at the standard rate, the threshold of 375 is not applicable, which we know that if I'm inside the mainland, my first 375,000 would, it would not be subject to tax. But if I am a qualifying free zone entity and I have certain income which would not be a qualifying income, in that case, 375K threshold will not be applicable. And I would just be, I need to pay tax on my entire income, which would not be the qualifying income. Now, as we can see that we have these activities, all a list of the qualifying activities. Okay, this is very important to understand that these are the activities only in most cases, which if you're dealing outside the zone, will give you the benefit of 0% tax regime. So I have just taken out few very key activities here, which I'll explain you in detail that what exactly is applicable in these activities. So first we'll think about manufacturing activities, which is very common inside the zones. So it will include the production, the improvement, the creation of a new product, and it also include my product planning, production, quality control. All these income would also be considered as my qualifying income. There could be some ancillary activities. Ancillary activities, the concept is that without which can only be conducted with my principal activity, and I am not giving that as a standalone service. So there could be some kind of a post sale activities which includes the installation or warranty or maintenance of my own product which I have manufactured here. So it would also be included as the qualifying activity. And similarly, if I'm having the customer support, it would also be there. But just take an example, if I am giving installation services as a standalone service, then in that case, it won't be a qualifying activity. And very important point here is that manufacturing does not include the repair service. So once a goods are being sold, repair being done and charged separately would not be considered as manufacturing activity. Next, we'll see the headquarter services. Now, headquarter services are also very common if I'm giving services to my sister entities, to my subsidiaries, where I am charging them to take some kind of a decision, where I'm incurring the expenses for my group companies, and then I'm charging to them, where I'm giving them financial services, where I'm giving them human resource management services, or stuff like that. All this would be considered my headquarter services, and subject to all other conditions which I explained earlier. If I fulfill this, I can claim 0% benefit on my entire income. Next is if I'm dealing into the commodities. Now, the commodities, there's a caveat with that it could only be the qualifying commodities. Now, the qualifying commodities are those which are being traded on a recognized exchange and traded in raw form. Very important. Example, agriculture commodities, which could be wheat, corn, soya, in which are traded on the exchange, would be considered as the qualifying commodities here. And the trade can occur on market and off market also. Previously, we don't have clarity on this point, and it was a common understanding that only trades happening via exchange would be considered for this kind of consideration. But now it is clear that if you are selling the qualifying commodities which are traded on the recognized exchange, whether within UAE or outside UAE, these sales can be via the market or can be off market itself. Next very important area here, which is the crux for this session, is distribution. Now, I explained you that if you're selling from within the zone, it's fine. And we need to understand that the distribution business have to be conducted from designated zone. Only then I can avail this kind of a benefit. So here, what I have is that I have a scenario. I have a detail also here, which you can go through. I have a scenario where I am having, I am the company which is inside the designated zone. Let's say that I am a company operating from Jafza. I import the goods, I purchase it, and it is the manufacturer is in some other country. For example, he's in China. He directly ships the goods to my client in some other country, for example, in India. And I'm operating from a designated zone. In this case, the goods never entered this country, but still it is it would be the qualifying income. Why? Because I'm operating from a designated zone. If the same third port shipment I start doing from a normal free zone, or I'm doing it from the mainland, I would not be able to enjoy this benefit. So in this case, my company C is performing the qualifying activity. Next is that I am distributing the goods which are imported in UAE. Okay, my first case was that I'm having it as a third port shipment, but now I'm distributing the goods and I'm importing them in the UAE. So in this case, the important condition is that if I'm importing the goods, they must be entering the designated zone. Okay, delivery must happen inside the zone, and then from the zone, the goods are imported into the UAE outside the zone, and I am selling it to my clients, who can be onward retailers or distributors, and they must not be end users. So in this case also, the only important condition is that I should be taking the delivery within the zone, designated zone. So just take an example that if I import the goods, but import and then clear them outside the zone, and keep it inside the warehouse, which is outside the zone, because the goods are entered in this country outside the zone. In this case, I cannot avail this benefit. So that's why the goods, if you are importing and then selling from the zone, then they must enter the country from the designated zone itself. Next, I am exporting the goods. Okay. In this case, I would be having my company here inside the zone, designated zone, and I am, buying the goods from an importer who is outside the zone, and I'm selling to a customer who is also outside the zone, which means I'm just exporting the goods. So in this case, very important thing to understand, when I purchase the goods from somebody in the UAE, and if the goods are already inside the UAE, then the condition of goods entering inside the zone would not be applicable. Okay. So you can see that here goods have not passed through the zone, but still, because the goods were already within the UAE at the time of, my company purchased them. So in that case also, I would still be able to avail this sort of the benefit. Next, distribution of goods and material within the UAE. Again, I must be a company in the zone. I buy the goods from somebody in the UAE, and I ask him to ship directly in the UAE. Still, I would be able to avail my the benefit of qualifying activity, because the goods were already in UAE. So just understand that if the goods were already in UAE when I purchased them, they should, I mean, his condition of passing the goods from the zone would not be applicable. This would only be applicable if I am, importing the goods on myself and I am then selling it onwards. So in that case, I have to pass them through the designated zone itself. So this is, all about the key activities which I discussed with you: commodities, headquarter, manufacturing, and the most important one was distribution itself. Now we'll see some other things which are applicable for us to calculate the income of a designated zone entity. So in this case, in this scenario, I would see that if I am having a branch outside the zone, it could be a local branch or a domestic branch. In that case, that branch which is outside the zone, its income would be taxed at the standard rate. There is no option to include that in my qualifying income, or we will be excluding it also if we are calculating the de minimis rule. So this would not be calculated if I'm calculating my de minimis threshold. Reason is, this would be taxed in any case straight away. Next is, if I am generating the income from some property located in the zone. If it is a commercial property, which means offices, warehouse, factory sheds, and if I'm dealing with the free zone entities, it would be 0%. But if I'm dealing with somebody who is not a free zone entity, for example, the scenario could be that I am owning a warehouse and I am leasing it to a company who is outside the zone. That income which I'll be generating would be straight away taxed. There is no threshold applicable for this. And I'm having non-commercial property here. In this case, in both cases, whether I deal with free zone entity or non-free zone entity, it would be subject to tax. So it means if I'm having a hotel, probably some kind of flats, anything, income from such units would be taxable straight away. Now we'll see that how we calculate my de minimis rule. Now the whole scenario of calculating this kind of a rule is that we need to fulfill the condition which are applicable on us to qualify for the qualifying free zone person. So here I have this. At my non-qualifying revenue should be less than a specific limit, and this limit is called the de minimis limit. Okay, so in this scenario, how we'll calculate it, that we will first of all see that what is my non-qualifying revenue. This include income from excluded activities and activities which will not be the qualifying activities. Okay, because I'm dealing with somebody who is a non-free zone entity. So I will calculate the amount number one here. Then I will calculate my total revenue, amount number two. This total revenue would be my total income or total sale which I derived during the year, excluding any income from the property which I shared with you earlier, the income from these properties which are straight away taxed, and income from the branches, local branch or outside branch. These two I will exclude from my total revenue, and I would get this total revenue here. Third thing is, there is a threshold given by the authority, which is 5 million itself. So very first step is that, for example, if my total revenue is 200 million, I will calculate 5% of it, which would be 10 million. Then I will compare it with the base threshold given by FTA, which is 5 million. So first one is this, second one is 5 million. I have to choose lower of these two. So of course, in this case, I'll choose 5 million. It becomes my threshold. And then I will compare it with my non-qualifying revenue. For example, this is 3.5 million. So in this case, when I compare these two things, I am within a threshold, and these 3.5 million would also be considered as my qualifying income, and I'll not pay any tax on this. So this is the whole argument here, that if I am falling within the the de minimis rule, that income which actually on face of it is not the qualifying income, that would still be taxed at 0% itself. Okay, but this kind of a threshold, I need to have this this calculation. Now I'll just explain you with an example to calculate my de minimis. So I have a total gross revenue, in this case 140 million, out of which I have non-qualifying revenue, which is 2.5, excluded activity 1.5, and the qualifying activity 116. Then I have some income from my commercial property here. I would not consider this. Non-commercial, again, I would not consider. Then I have my domestic branch. I would not consider this, and the foreign branch also. I'll not consider this. So my total revenue for my de minimis calculation is this, which is 120, and non-qualifying revenue is these two. As you can see, I explained you that non-qualifying revenue include excluded activities and activities which will not be the qualifying activity. So I did this. I have now the first step is that I would calculate my 5% of total revenue, which in this case would be 6 million. I have the base threshold, which is 5 million here. So my lower of these two is 5. Now I will compare my 4 million with this threshold. So in this case, I am within my threshold. So I'm all set. I don't have to do anything. And his income would not be subject to taxes. Now, supposedly, if I am the one who is, opting for this, okay, I fulfill all my conditions, and I decided that I would be the one who is the qualifying free zone person. So what will happen here now? There are certain, consequences. Now, the consequences are that I cannot take the small business relief, which we know that if the turnover is 3 million, up to 3 million, I don't have to pay any taxes till 2026. But in case I am, opting for the qualifying free zone person, then I cannot avail this. If I transfer within the qualifying group, I have certain kind of concessions. Again, I cannot take it. Business restructuring also, it It also have some kind of a relaxation on some income. I cannot transfer, loss of company A to company B within my qualifying freeze, within my qualifying group, and I cannot be included in my, in my tax group. This is the major consideration, that in case if you wish to form a tax group, then if you are a qualifying free zone entity, you cannot be included in that. And then I must have audited financials also with me. So these are the considerations which we should have in case we wish to form, or if we wish to, avail that qualifying free zone kind of a regime. Now, this brings us to the end of the session. I'm just now taking through the questions also. Meanwhile, just to explain you that we, as the, Lynchpin Consulting, we offer the trainings for the staff on CT and on VAT, and we also do the tax impact assessment, and we also do the assessments and get you ready for the compliance. You can always send me the email in case you are, interested. Now I'll be taking the queries, but meanwhile, for those of you who are interested to get the slides and the recording, there's a small form. Please scan it from the cell phone. It would be a small form. Please fill that form. And those of you who are filling that, at the end of the session, the team would be sharing with them the slide deck as well as the recording. And in case if you are, unable to scan it for some reason, we have also mentioned the URL here. So you can also type this and can fill this form. So I'm now taking the questions. In the meanwhile, please, you guys can continue with filling the form. Okay. I have a query that you don't need to pay 9% on those non-qualifying income that is under the Minimis rule. Yes, as we discussed, that if the income is within that threshold, we don't have to pay tax on that. Okay. Next, I have another query that from Anish, which is, we are a JAFSA company, ex IT distribution. We have mostly export sales and sales in JAFSA, where free zone and mainland companies take dispatches in JAFSA only. All are resellers. We sell to our group company, same UBO, okay, who is also reseller based in mainland but does business in free zone only. Is X company income is the qualifying income. Okay, so you are a distribution entity, and you have export sales in JAFSA, and the goods, I'm assuming, are imported via JAFSA. If you are selling to the local entities, or if you are selling third port, yes, in that case, in that case, you will be filling, you will be fulfilling this condition because you are operating from JAFSA itself, and it would be a qualifying income. Next, I have from Shameen, which is it mandatory for sole establishment to register for CT in both free zone and mainland? Okay. Now, when you form a company in a free zone, normally in UAE, what I've seen, that free zone does not have the option to form a sole establishment. Any entity which you form inside a free zone is a legal entity. Okay, even if it is an FZ Co, FZ LLC, in both cases it is a legal entity. So in free zone, normally you don't have the concept of sole establishment, but just to have a theoretical kind of a discussion, if free zones are also forming a sole establishment entity, then in that case you are actually enrolling the owner of the company, because the company itself in this case would not be having a separate standing. And same goes for the main and itself, that if you are operating as a sole establishment, you are operating as individual. So in this case, you will only apply for the CT registration if your sale from all of the establishments exceeds 1 million AED. So example, I have a salon. I have a salon that, and in that salon, my annual sale is only 700,000. So I cannot register for the CT. Even if I'll be applying, FTA will not be accepting that. Second, I have three different salons. Okay, all are sole establishment. In that case, I will be clubbing the income from the sales of all these three salons and see if it exceeds 100. If it exceeds 1 million, in that case, I would be applying for this registration. Mr. Abraham has said that, does a regional headquarter qualify as headquarter business? Yes, indeed. You may have, across the region, or you are operating from the zone and you have companies which are, in the mainland also. In both cases, it would be applicable. I have few other queries. Just give me a sec, please. Few have sent on chat. Okay, you have asked, Bharat, that is it recorded? Yes, on the screen you can see a QR code. Please scan that and I'll be sharing it to you. Okay, I have question from Shahid. What is the deadline for offshore company registered in JAFSA and RAK ICC? It's not specific to zone. At the start, I have given you a table. You have to see that, depending on in which month you have actually, incorporated. So example, if you have been incorporated in the month of Jan and Feb, then the deadline is approaching already, which is 31st of May. Does de minimis apply to qualifying intellectual property business? Actually, it is applicable to all the activities where you are planning to avail the status of qualifying free zone person. So if you are planning to avail that, okay, de minimis will be applicable. Then I have from Mendes that our head office parent company is in Singapore. Our free zone company is subsidiary of it. Okay. Do we need to register Singapore company? No. You are having a subsidiary here, then that subsidiary would be required to have that registration. Foreign entity, just to have this clarification, if Singapore entity is effectively controlled from UAE, for example, the CEO sits here, the board meetings handles here, the staff is sitting here, the operations are conducted from UAE. In that case, the Singaporean entity also need to get the registration because it is based on place of effective management itself. Let me see if I have questions. I think we are done, guys. Thank you very much. If there is anything else which we can help you guys, I'll be sharing the slides with those who have filled the form, and you also have my email ID here. You can always be in touch. Have a good day, and inshallah, we'll be sharing the other webinar series also with you very soon. Thank you very much.